Dig a little bit deeper into that data. Joining us this morning, former Fed Governor Frederic Mishkin. Rick, it's great to have you back. Thanks for joining us.
Good to be here.
While we're on that topic, what do you think some of these longer-term yields are trying to tell us?
Well, I think one of the issues is that Trump is actually interfering with the international financial system that we developed over a period of many, many years. And foreigners, as a result, are pulling out of the market. So the risk premium or premium for U.S. government bonds has in fact gone up. And a way of thinking of this is we're losing what we used to call the exorbitant privilege, the fact that everybody wanted to hold dollars and hold U.S. Treasury securities. That's been going away, and that's a real problem.
There's a big piece this morning on the FT looking at Elliots, big hedge fund, arguing that this trade war friction risks longer-term capital flight. Is that a view that you share?
Yeah, I think that this is a big problem. I mean, people are mostly worried about whether it'll cause a recession or not because of all the increased uncertainty, because the Trump administration flip-flops. Every day we get something new. It's actually, as he said, it's good TV. But the long-run issues are really much more serious because we've developed a system where we have very efficient supply chains, that we have flows of goods and services and capital across countries. And that's actually made for a better world order and actually more successful economies. If that goes away, that's actually harmful to the long-run economic growth, not just of the other places, but the U.S. as well. And that's really a big problem. I think actually a bigger problem than any short-run effects.
Rick, it's Sarah. I want to push back a little bit on and I know that there was some talk about foreigners dumping our treasuries and what's happening with the global trading system. During the week of May 9th, Japanese investors bought $13.3 billion in overseas notes and bonds. Buying was seen in 3 of the last 4 weeks. So that does run counter to the narrative that foreign buyers are, for some, just have stopped buying our treasuries. It's not clear that that's really happening.
Well, you know, the thing is that whenever we get good news from the Trump administration, i.e. lower tariffs, you see the markets bounce back. And in fact, we've seen a huge bounce back of the stock market, for example. So the fact that you can pick periods when you get sort of good news that Trump may not go as far as he has in terms of harming this international financial system, the markets bounce back. But that doesn't mean that there haven't been long-run consequences in this context. And in fact, Treasury yields are actually very high. The long-term yields are actually quite high, particularly relative to what short-term interest rates are. This is actually unusual. But in fact, very understandable given what has been happening in terms of policies from the U.S. government.
So you sound pretty negative. Does that mean that you expect the economic fallout from here to be ugly? Because we haven't really seen the impact, right?
We haven't seen the impact yet. We're starting to see a little bit. I mean, I noticed when you buy goods still, prices haven't gone up. I just bought something on Amazon, which are earplugs, and they were just as cheap as ever. And that's because they're in inventory stocks. But that's not going to last because the things are made in China. Okay, so the impacts of the tariffs are actually going to be coming down the road. They aren't really here yet because people had stockpiled so many goods pre-tariff that, in fact, you can still purchase things at relatively low prices. But that's not going to continue. The other issue is that there's permanent damage here to a trusted system that seemed to work pretty well. You know, I know that there are many voters and Donald Trump's administration isn't so sure about that this has been a good thing. But in fact, our world trading system has gotten more than 1 billion people out of poverty, deep poverty in the world, which is a huge achievement, huge improvements in terms of life expectancy and so forth. And in fact, the U.S. has actually been served well as also. Maybe other people have gotten even better from this, but we've done all right from it as well. This is a real long-term issue. We're seeing the markets are reflecting that, particularly in the Treasury bond market, and it is a real problem. It's a problem for the Federal Reserve.
Yeah, you've made that point, and certainly many others have made it as well, Rick.
Yeah,
you know, when you talk about
I'm not alone. Economists frequently do think about economics, and we're trained in a similar way, so it's not unusual that many of us agree.
No, all right, but when you say long-term, given the short-term nature of everything these days, what do you mean? Are we talking many years from now we see the full impact that you're expecting, perhaps?
Oh, absolutely. I think that the type of system that we had basically developed, very unusually, the U.S. took a lead in this after World War II, particularly because of the mistakes that were made after World War I when this wasn't done, and it was a disaster. in fact, there are a lot of parallels to what happened in the interwar period to what's happening today in terms of damage both to the economy and also potentially for world war. I mean, it's a very scary thought that this could happen, but the odds are higher now than they were previously. So the long run effects are actually things that go out quite a long way. That you could talk about years, and growth rates being lower for a period of years is a much bigger impact in terms of people's situation than a short-term recession. So this is actually really, I think, the biggest issue, even though the issue of whether it will harm the economy in the short run is one that people focus on.
Yeah, it's a great point about sort of short-term and long-term news cycles, Rick.